What a day. Porcupine Day. Wick Day. A day where the charts just wanted to take it all from you.
John Wick was in the house.
It was a flat day. What was it today? 0.39%? Almost nothing. But in it, I lost everything.
Overnight trade was a winner. Up, 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 up. Give it all back today. How dare we?
Welcome to Revelations for Thursday, February 19th, 2026. I'm your illustrious trading guide, Tom, Secret Prophet Hartman, and serving at my pleasure is my first acolyte, Peter Bad Guru Hartman, because I could take it away like that. On Revelations, we go over the trade setups for the past day and the day ahead, all to teach you, the congregation, how to use divine indicators to trade for profit and purpose. Today, we'll be taking a look at MNQ from the lens of a prop firm trader and a little bit for Bitcoin. So like, follow, and listen, because the next few minutes just might change your life. Peter.
Yes.
I like trying to make Sacred Profit, the site and the dashboard and my tool set, useful in the sense that it helps me avoid mistakes I've been in the past and see opportunities in the future. This is why on the Sacred Profit dashboard, we have now, even available for free users, we have Fed rate outlook. So we get to see, hey, what's the current polymarket bets for for Fed rate cuts, because that's very, very useful to know what direction we think markets will be in. If we're thinking we're going to be cutting, we want liquidity. If it's not, it could be quantitative tightening, all kinds of stuff. So I like it. I like having this here because I was constantly forgetting, Peter, to go to the Fed tool in order to figure out, hey, did what just happened change any of the probabilities? Also, it's nice to know if it's like lopsided, and I think it should be something different. I can just click on the button, go place my bet, and make some money on the other side. Just saying, you don't get that by going on TradingView and looking at futures for bond market. It doesn't feel exactly the same way. On top of that is economic events. We have economic events here for today's events and the ones for tomorrow. And I like to see only 3-star events, so I know, hey, do I want to avoid this? Do I want to see this? Today there was initial jobless claims. We had crude oil inventory, core PCE, all kinds of stuff. I like knowing that. I have over here on the right quick links. And over here, tucked away at the very bottom is this options expiration calendar, which very soon after next week will no longer be just a silly link. It'll be on my GD homepage, right on that dashboard. Why? Because today was February 19th, and we are headed into tomorrow, options expiration. Now, we won't belabor the point of what option expiration is, but suffice it to say, it means that all kinds of crazy things can happen mañana when options disappear and there's no more protection towards the downside or the upside. Who knows what happens? But you know what generally happens the day before, Peter? Or what can happen the day before?
What can happen the day before?
Chop, chop!
Is that today?
That's today.
Yeah,
chop. Because what happens is that even though the options, through theta decay, options decrease in value as they get closer and closer to the option expiration date. So if I take a bet that the S&P is going to be up 1%, if I take that bet 3 months ago, I have to pay a lot for that option because someone is on the other side of that bet and they're taking that bet for 3 months. Every day that might happen. But if tomorrow is the day that might happen, well, then that bet costs a lot less because there's only one day that it might occur. But it also means that if the market does move significantly towards that 1%, all of a sudden, that bet that before might have given me a 20% gain now might give me a 200% gain, 2,000% gain, depending on how high it goes. That's called gamma. That is how much the option price will move based on $1 of the underlying.
Now I understand why you're talking about this, because there's a gamma.
Gamma, exactly. Options gamma, super, super important. Options gamma is sort of like one of those weather patterns. And if you go outside and you see storm clouds and you hear rumbling, you go, okay, it's probably going to rain today.
So I don't need to be trading options to care about gamma.
Gamma, absolutely not. It's just letting you know what is the likelihood that en masse, net, through the market, how are people positioned? Are they positioned for something bad to happen or not to happen? Well, not even bad or not to happen. Are they positioned for a big move in markets or a small move in markets?
And is that kind of a wisdom of the crowd type of situation?
No, it's more about we care about forced buyers and forced sellers here at Sacred Profit. That's what we care about, right? Forced buyers and forced sellers. If you're trading against buyers and sellers, then it's about wisdom on the markets and what happens there. If you're trading against forced buyers and forced sellers, there are certain things that happen where they have to behave in a certain way. In gamma, in fact, we'll just move over here quickly to the spot gamma dashboard here. I'm just going to show you. This chart is showing me these red and blue zones and this blue line bar in the middle. The zero gamma is over here. That means here it's sort of like perfectly equilibrium, perfect balance. When we are below this area and we're negative gamma, what that means is that the market makers, forced buyers and sellers of options contracts, they have to hedge their position by going in the direction of markets. What does that mean? If we're in negative gamma, the more negative gamma we are, the more market sells off, and the more market rallies. When you are in positive gamma, like we were today, the opposite happens. The more the market rallies, the more those market makers become forced sellers. They bring down the market. And when it goes down, they bring up the market. Because what they're trying to do is pin the options in a certain range so that they don't have to pay out the people who are, let me show it to here. This is today's MNQ. In a sense, if they pin the market around a narrow range, they don't have to pay the people who bought that the market will go up here or go down here. Not that they're doing it specifically, but it's just the way that they're positioned. Because of the balance of probabilities for how the options have been purchased, the notional gamma that's available, it's net positive or net negative. Here it's net positive. So when the market goes up, they have to sell it. And when the market goes down, they have to buy it. That causes chop. Here you see that here on the 15-minute as wicks. And if we go down to the here, the 1 minute, you'll see it as just major oscillations, just constant up and down, just constantly up and down. So when you see the weather report, when the weather report says, hey, we are in positive gamma territory, I should know, Peter. Chop. We looked at chop earlier on this week, looking at when price comes in and it's at VWAP, right? Then you could also get chop as well. But that does not necessarily preclude a trend. Whereas when you have positive gamma, especially large positive gamma, I think we're at almost 2 billion today, then it really behooves itself. You can really get pinned inside of a range. So I got to find some way of placing that. I got to put option expiry on the dashboard so we can see it every day. Going to make it clear to everyone, as well as, if possible, bringing in gamma information so that we can also get a sense of the weather pattern for the day. Already starting to work on that.
I'll allow it.
So if we take a look at the trade of the day, if we take a look at the 15-minute, what we saw in the overnight was one of the classic moves here that we've talked about before. 6 p.m. opens up. We expect a move down towards the daily VWAP close. So even though we opened up here, the price opened up over here. What it did is that the price rinsed through and went through both of these levels. I've never mentioned this before specifically, or I don't mention it often, but the price, the candle opened up over here at 6 p.m. And you'll notice it actually crossed over here. It actually crossed right over both levels, here and here. I hesitate to mention this as a hard and fast rule, but the first candle of a time frame can't mitigate a level. That's why in my script, you'll notice that only when the price comes back over here and retouches it, does it actually get mitigated. Like it actually, the opacity becomes lower and beforehand it's brighter. Only when the price comes back to it. I used to have a year ago, if you guys remember, a version where that was not the case. And I was like, oh, it got mitigated. And the price would constantly come back and revisit it.
Right.
So I would say about 85% of the cases, the price has to come back and touch the level again. In fact, we come back and touch these levels again and again and again and again. So I think it makes sense that we don't clear it at the first one. So I took the trade. I took a short from over here to over here. That won out. That was great. I didn't get this long trade. Actually, I was in a long trade up. What was I aiming for? I actually got into that trade around over here. Yeah, around midnight, 1 o'clock. What I was trying to aim for is this 2-hour level in purple up here. This is a 2-hour unmitigated level. Why? Because all the other 2-hour levels were already taken. They were already taken out. So I wanted to get this move up. And I even had a limit order up here ready to short from over here. Unfortunately, the perfect trade didn't happen, and we fell before we reached that line and before we even got to the 4 a.m. Ticker here time. That means some news must have happened or whatever that was the London session. Some news must have happened that already brought the market down. So unfortunately, I couldn't get into this trade. But where did we fall to? We fell to this 2-hour level that was down here. The 2-hour levels, you guys are going to hear me talk about it more and more now because they're very good for nearby movements and they're super relevant in chop. 2 hours is like the thing. Whereas the move down towards this daily level, which was created yesterday, that I was hoping for, that we didn't even get to. Like we missed it completely. And we didn't even go up to the next level up over here. Like we didn't even get close to touching those guys. Whereas the 2-hour levels do get touched more often. And even more the 15-minute level, but we're not going to harp on the 15-minute level today. So the price moved, as we saw, all in the overnight, not 100% of the time, but most of the time, to these are the 2-hour levels that it moved to. You'll notice that the price crossed constantly. How it gets there, as it go through, hey, that's for you to learn how to trade it. Our bias was towards the downside because that's where the daily level was. So I was always looking for opportunities to short. And so I set a stop sell order right below the VWAP level so that I can get into a trade when it fell. Why? Because after here, there's no other 2-hour levels until we get down to this level as created yesterday. And I love those air gaps. I think I'm even going to try to make a new script in the next couple of weeks that actually show you these air gaps on the page so that if you do fall into those levels, you don't get shaken out. There's a high likelihood that we just pass through until the next level down. But once we got down here, we essentially oscillated around here all day. But even in those oscillations, what did we get? Move up to the 2-hour level, 2-hour levels. Again, these 2-hour levels became areas that the price touched. But because of the severity of the candle, of the wicks, hard to trade, Peter. Hard to trade, like we saw today. Very, very hard to trade. Also, one other thing I wanted to mention is that when you're in chop, oftentimes in chop, price will revisit mitigated levels. So you see over here, after the overnight, the price came back this level over here, which is the daily level, and over here, the price revisited these levels again and again and again and again. This is another sign of chop when we revisit again and again and again and again. So if that's happening, you want to pay attention to previous levels, like over here, the price came back up again. It came to revisit. So you got to treat those mitigated levels still as substantial because we're chopping around in these zones.
What is a 2-hour level?
Whenever I'm referring to a level, I'm referring to a historical VWAP level. That means that is the price that VWAP closed at when that time frame closed. So if I'm saying a daily level, that means the VWAP price at yesterday's close. If I say a weekly level, that is the VWAP level, the price at last week's close on Sunday. If I say a 2-hour level, that is the price of VWAP at the previous 2-hour close, 15-minute at the previous 15-minute close. That's always what a level is. And then a level is unmitigated if the price has not revisited that level since it was created, and it becomes mitigated when the price has revisited it at least once.
Except for potentially, not a hard and fast rule, the first candle.
Correct. The first candle, whatever that candle is for that time frame change, doesn't matter what time frame you're on. That first candle does not count. Now, that's why it gets a little iffy, because you might imagine that if you're looking at a daily time frame, right? And or a daily level, and that level, and you're looking at 2-hour candles. It might take 2 hours before on your 2-hour chart that daily level gets mitigated, but it might already be mitigated on a 15-minute chart. That make sense?
Yeah.
And so if you're trading the 15-minute, you're like, well, that's a mitigated level. The price shouldn't come back over here. But on a 2-hour chart, it might come back. The thing is, that's where you sort of don't want to be going back and forth. You don't want to be like, well, it was mitigated on the 15, so that means it can't come back on the 2-hour. No. The mitigation happens at the level of that chart. In fact, it goes even a step further than that. The levels might not even be exactly right depending on what time frame you're on. Why? Because we're measuring volume based on price, based on candles, and based on the available data. So on a 2-hour chart, you're taking into, and if you're looking at a quarterly level or whatever it is, you're taking a lot more data in larger time frame, in larger candles, than on a shorter time frame where those candles might be a lot smaller, the volume is more I'm thinking in French, éparpillé, a little more spread out, and so the numbers might be different. That's why sometimes you're on a chart, I'm saying, the levels over here at this price, like at 914, you're like, but I see it at 950. Oh, you're on the 2-hour. You're seeing it at 950 on the 2-hour. And it's different on the 5 minutes, different on the 1 minute, and so on and so forth.
And different assets will favor different time frames?
Correct. Different assets will respond. They have their preferences for the types of VWAPs that they respond to. Why? Because the whole reason why the VWAPs are important is that these are what institutions and large players use in order to get in and out of the positions, VWAP levels. And so if you're dealing with, let's say, gold, it's usually dealt from anywhere from a yearly quarterly time frame down to the weekly, because it's generally central banks and exchanges that are dealing with this, and they're not trying to trade intraday on the asset. If you're dealing with Bitcoin, you get a mix. You get long-term time frames, super useful. So if you trade the 3-month on Bitcoin, you're going to get really great entries, really great exits. You'll take 4 trades in 10 years, but they'll be great. You'll get the direction right. Whereas if you trade you can also trade the 15-minute on Bitcoin. You could even trade the 10-second. I was taking a look on this. The 10-second on Bitcoin, that also works for well too. And so each chart, because of the participants that participate inside of it, determines what kind of time frames make sense for that asset.
What trades do we have coming up? What are you seeing in the charts for MNQ? I also want to know what you're seeing in the cards in the short term for Bitcoin, if there's any trade there.
So if today was the thunder rumbling in, the clouds rumbling in, and we're sort of like not sure what's going to happen, tomorrow might be a total rainstorm.
Oh dear.
We don't know. Because it's option expiry, and because where we are right now, we came in on MNQ, we closed here right near the daily levels. So the daily levels are right here. We're just about as close as we were yesterday. I can expect chop again tomorrow. And what'll happen is that those options, they expire at, I believe, at 3 p.m. Right? Well, they expire at 3 p.m. Yes, the trading stops by 3 p.m. So what happens is every hour as we get closer to there, gamma can increase while people become less and less protected. So it can be crazy because if an event occurs at a time like this, it can absolutely be a 3 sigma event. And if nothing happens, it might be a complete nothing burger as we whisper out at the end of the week. We don't know how people are going to decide to be like, hey, now that the options are gone, let's go ahead and reposition ourselves for the next quarter. We don't know. It could be that after those options are gone, in the last hour, the last 30 minutes, the charts go crazy. There's just no way to know. So you're going into a dangerous time tomorrow. You want to take a look at what Gamma does throughout the day, and obviously pay attention to all your indicators to tell you more about volatility. And you want to take a look at correlation across different assets. But the problem with this sort of thing is that when a major thing like this is happening, option expiry, it sort of reflects the same way in other assets. So if I were to take a look at Bitcoin, it's not for nothing that Bitcoin today actually fell exactly to that 2-hour level we were talking about yesterday. Remember, I said, hey, I'm expecting Bitcoin. Let me zoom out so you can see a little bit better. I said Bitcoin fell over here on December 12th, and that I'm expecting it to come here today. That's exactly where it went. But then it bounced up from that level to over here. Do you remember I was saying yesterday too, Peter, that I'm expecting this to bounce just up to the daily level?
Yeah.
So we went from there to the daily level. We didn't blast off. In fact, we're pulling back a little bit to the daily over here. That means we're sort of like in between ranges. Bitcoin's trying to decide what to do. It's not the only one. If we take a look at the dollar, we'll see that the dollar also did the same sort of thing. It peeked its head above the trend, like we talked about this morning on Price Action Live, and then it came back now to test that trend. So the dollar can decide, okay, I'm done going up and get up the ghost, or it can say, let's go, buddy, let's head up to new all-time highs. And we'll see this in asset after asset after asset, that we're now at a sort of like tipping point where everyone's like, okay, what are you going to do? 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 And we wait until something occurs. So if nothing happens, it could be a nothing burger and we drift. And if something does happen, it can be a major catalyst within markets. My bias is towards the downside. Why? Because generally speaking, the dollar had been going up. Generally speaking, Bitcoin went down. And generally speaking, the NASDAQ and the S&P were making lower highs. So generally speaking, I favor the downside, let's say 55%.
Any trade tonight?
No, I wouldn't be taking any trades tonight. We're too close. Way too close. There's 30 points or something like that to take. So nope, nothing for me. And after a day like today, where I got chopped up because I wasn't paying enough attention, it's hard to work a full-time job, Peter, and and trade. It turns out, but at 14 points, it's like nothing. It doesn't even cover one stop loss. So I'm not trying to do negative RR here.
What are you, yellow?
Well, I'm still short Bitcoin. I'm sort of not upset, but I could have nicely exited my position over here and then re-entered the position up where I expected over here and gotten not only that money, but 2% up. So I would have made another 100% on that position and then short again. The reason I don't like that is that that's like calling each coin flip. Coin flip 1, coin flip 2 is like, okay, let's just not, we've all seen the scene where that guy goes to the roulette table, puts it all on black, and then, let it ride again on black and let it ride again on black. Look, I have confidence in my ability, but let me not be crazy here. Plus, when I get a perfect entry like I did on the 16th, I mean, I've been in since over here. Why do I want to risk losing my money 3 ways? Like, I'm going to stay in my short. Let me just stay in my short here. Not eager for that. All right, guys, that's it. We'll be back tomorrow. Actually, no, today's Thursday. We're not going to be back tomorrow. If you guys want to see tomorrow's wrap up.
If something crazy happens tomorrow, we might be back tomorrow.
Nope. If you want to see it, you go on after hours. On Traders Post after hours, you go over there. Peter and I will be there Friday at 4 p.m. So an hour earlier than we normally do these. You're going to get the breakdown of the trades for that day. If anything big happens, definitely talk about it there. And if you want to hear, the fallout for that after we thought about it more, it'll be on Sunday. But Fridays, I'm sorry, Peter. We do enough live streams as it is.
More live streams.
We're not going to repeat the same thing again. Go to Traders Post. That's where I am in order to get some of that information. Guys, this is great. Useful. Nice to have you here.
Let us know how your trading day went. Let us know what you're thinking for Bitcoin down in the comments. We read them all. Very interested in hearing what you have to say. Like and subscribe. This is the most underrated crypto market analysis show on the interwebs. So stay here, stay dear, stay.
Well, they want it to be, because if I get too popular for too long,
Yeah,
you guys know what happens.
you're gone.
I'm out of here.
Your toes licked.
Oh my God. Once I get enough money, oh my God. Oh my God. Beating it. All right, guys, it's been fun. We'll talk to you soon.